friends. Welcome to Proficient and welcome to today's webinar. This is 25th of May 2018, Friday, and it is 4:30. We are doing this webinar rather, uh, to give you a quick view of the overall market condition as we are seeing. We will start with uh, a brief overview of the US markets, which stands for the global perspective, and then we will take a view on dollar index and important commodities like gold and crude. Then we will come to the Indian market. We will take a look at Nifty, how it's behaving, and then I will be giving you certain stocks to trade for the next week. So let's start this week's webinar. Whatever you are looking at my chart is the daily chart of S&P 500. This is the US index, and nothing much has happened in the past 2 weeks since we communicated last time. The S&P continues to stay above the most important moving averages. As you can see, the blue one is the 50-day moving average and the red one is the 200-day moving average. S&P continues to stay above these moving averages, and that is bullish. That is without doubt bullish. And there is a downward trend, the downward trend line that has been broken. Downward trend line touching the January, March and April tops, and that downward trend line is broken at around 2700 level in S&P, and it is staying above that level. So we can assume this downward trend line violation is quite legitimate, and from that we can say that it is quite possible that prices will go higher. 2700 was a resistance that has been broken. Now S&P is trading at 2727, and 2800 rather is the nearest resistance that we can see. And if 2800 is taken out, then we will see the long-term uptrend to resume quite fiercely, and S&P in that case will be very likely to scale new heights, right? And if S&P keeps on making new highs, then chances are very high that our own market, Nifty, it will also not remain weak and it will also go higher, right? So overall view in S&P remains bullish, and 2700 is where the last 2 weeks bottom was created. 2675 region is where the 50-day moving averages are holding, and 2630 region is where the 200-day moving averages is holding. So unless these levels are broken, this view remains valid, and our opinion is that S&P and overall global markets are more likely to go high in coming days. So having said that, let us take a look at the US dollar index. So this is a measure of, so this is the daily chart of dollar index. This is a measure of how the US currency, which is the dollar, has fared against 5 other major currencies across the globe. And from this chart, we can see that dollar index is really showing strength for past 1.5 months, for past 5 or 6 weeks, and it has actually gone above the important moving averages of 50 and 200 day. So dollar index is also getting strength, and this is a bit bearish for the commodities, right? Because global commodities are quoted. Global commodities like crude oil, like gold, copper, they are quoted in terms of dollars. So if dollar index gains strength, then there will be some upward, there will be some selling pressure in those commodities, right? Right now we will open the chart of the commodities, but as of now, we look at the weekly chart of dollar index, and here you see that the October 2017 top was at around 94 or 95 level for dollar index, and it is right now being approached, right? So we expect a little bit of resistance at 95 levels, and if that is broken by dollar index, then gold is very likely to fall. But crude oil has some other factors as well. So crude oil, the effect of strength of dollar index on crude oil may not be found as that strong, but gold will, it is highly probable that gold will fall more if dollar index goes above 95, because above 95 there is a lot of space for dollar index to appreciate. So that will put a lot of selling pressure on gold. Let us see how gold is behaving. Globally, and this is the daily chart of gold, where we got yesterday's closing at 1304. Now last week we saw an important support violation, which is at around 1310 level. At one go, gold broke that level, and also the 200-day moving average, and gold is now trading both below both the important moving averages of 50 and 200-day denominations. So the 3-month-old choppy range that we saw from 2018 January to 2018 April have been broken downward for sure in gold, and a short-term or an intermediate downtrend we can see in this chart. And this downtrend will be even aggravated by strength in dollar index. So if dollar index gets strength and gold continues to stay above the 200-day moving average, then a violation of 1290 will be very significant, $1290 per ounce. In that case, we can see gold to come down to 1240 regions. That is possible. $1240 per ounce region is possible for gold if dollar index goes above 95 or so. What is the picture in crude oil? Because crude oil is making new headlines. Yes, here is the daily chart of crude oil, light sweet crude oil, and you can pretty well see the long-term uptrend in crude oil. It is showing clear signs of higher bottoms, and you can draw upward trend lines joining these bottoms. So longer term trend is definitely up. There has been a correction for the past 3 days, and once this correction ends, prices are likely to resume the longer term uptrend, right? Looking at the MACD, we can say that the correction may be protracted a bit longer in crude oil. Even if $70 per barrel is broken, that will not hurt the overall primary uptrend in crude oil. Actual support for this energy commodity is at $67 level, which is the 50-day moving average, or which is the May low, the lowest of May so far. That is where the important support holds in crude oil. And unless that level is broken, the longer term uptrend remains valid. And a short term pullback, even if it continues, it doesn't mean anything. It will be an opportunity to buy, and stop loss will be the first week of May low, which is at 67.10 kind of level. So unless that level is broken, the longer term uptrend survives in crude oil, and we will try to buy crude oil on all pullbacks. So that's a global perspective. Let us see how the market is faring back home. Let us open the chart of Nifty. This is the chart of Nifty on daily time frame, as you can see. Pardon me for the chart not being updated as yet, because the market is closed just an hour ago, and we have not got time to update the chart. Prices here is 10,513, but today we got an exceptional strength in Nifty, and Nifty closed almost 100 point higher at 10,605. That is the cash Nifty. I'm trying to put a horizontal line there. That is 10,605. So at this level, we have the current closing. And what is likely to happen next? See, market this week penetrated the 100-day moving average, and it stayed there for quite some time, for 3 consecutive days. But the 200-day moving average was not violated. It survived, and the prices are now again above the 100-day moving average. 50-day moving average was broken only on Wednesday, and on Thursday and today, Friday, prices are again above this 50-day moving average. So we can confidently say that since prices are above most of the moving averages, and also before analyzing, let us take a look at the weekly time frame. This is the weekly time frame, and the horizontal line is where this week's close. So on a weekly basis, we have a minor gain of 10 points. But most importantly, Nifty this week came close to the doorstep of 10,400, but it did not break that level, 10,400. It held for a support, and from there it rose almost 200 points. Now, next week's prices will become important if this week's high, which is 10,620, prices stay above this week's high and stays there for a longer period of time. Because from the weekly chart, we can say this is a sort of hammer formation. Now, hammer formation is something that actually ends pullback during an uptrend, and bottom is said to be hammered out. So there are chances that prices might go higher, and this will be confirmed if prices actually stays above 10,630 region for a longer period of time. And the confirmation will come at around this level, which is the midway of the previous week's range, at around 10,710. If prices can go to that level, that is 10,710, then odds will really increase that we are having a resumption of the uptrend, and whatever happened in the past 2 weeks was merely a pullback of the longer term uptrend. The most important evidence is that prices are still above their important moving averages. Let us take a look at the Fibonacci analysis. This is the January top of the market, and this is the March low of the market. From 11,171 we came to 99.51, and from there we are again rising and going to 10,605. So as you can see, this level, here it is, this level, which is the 10,700, as I told you earlier, 10,700 to 10,710. If this level is broken upward, then odds will really increase that the longer term uptrend will resume. From trading perspective, that will however be a bit late to take a new long position. I'm recommending a long position in Nifty with a stop loss at 10,417. So the stop loss is also 200 points lower. So you can do two things. Either you can wait for a retracement, so that if prices come down, you will have entry at a better price. Stop loss will be 10,400 or 10,410 kind of levels. Or you can trade with options. You can sell put options of 10,400, or you can buy call options. These options will have to be managed because there will be time taken if you buy, especially. So that is another case. I am only giving you my point of analysis from the directional opinion. Directionally, chances are high that prices are more likely to go higher, and 10,700 is the make or break zone for Nifty next week. So that's the opinion in Nifty, and if it so happens, what are the stocks those are most likely to gain prominence next week or in weeks to come? 2 weeks ago, when we conducted this seminar or webinar rather, we had given you that FMCG sector is one of the most happening sector as of now, and we had given you many picks like Hindustan Unilever, like Dabur, like Nestle, like Jubilant Foodworks, all these stocks, and these stocks continue to perform, right? Let us open the chart of Dabur. This is the Dabur updated till Friday. This is the chart of Dabur, 369. But today Dabur closed at a lifetime high. Today's movement was a very strong movement. Over 2% rise happened in Dabur, and today Dabur closed at 378 level, right? So this is the price, this is the level where Dabur closed today. As you can see from my chart, this is the highest ever closing for this stock, right? Yes, this is the highest ever closing for this chart. So Dabur continues to move upward. In fact, all the FMCG stocks are continuing to move upward, and they really continue to be the most happening sector even now. Right now, if you buy Dabur, your stop loss will be at 366 level, so there is a 12 or 13 point of risk, 2 or 3%, and you have to hold this position with that stop loss. I don't know what is the target upward, because stock prices do not move according to targets. You have to either build a position by doing incremental buys, or you have to hold with a stop loss and get out with a target, or you can wait for the price to rise higher without any target. So that's a different choice, but as far as direction is concerned, Dabur continues to be one of my favorite stocks, and I'm recommending you, along with Hindustan Unilever. This is the chart of Hindustan Unilever, and this chart, this stock today closed at around 1575 odd levels. So yeah, this stock was showing some pullback in the initial part of the week, as in tandem with Nifty. But it seems to have ended. The pullback seems to have exhausted, and prices are likely to resume the longer term uptrend. So Hindustan Unilever is another stock that I'm recommending you to buy with a stop loss at 1550 or 1548 rather, and 1620, which was the last high made, is the nearest target, and above that any other price is possible. You have to keep your stock trailing, but this is another important stock from the same sector, FMCG. Just like Jubilee Food, this stock is continuing to wonder us. This stock actually made a new life high yesterday, and so you can see from this chart that the trend is pretty strong and straightforward. Nothing much has to be mentioned about it, and any pullbacks are opportunities to buy. Britannia is another very favorite stock of ours. Today it closed at 58, about 5800 levels. 58.27 to be precise. So yeah, this is another lifetime high from Britannia, and this stock again continues to move higher. So one should definitely keep a buy position in this stock, and longer term support or longer term stop loss will be 5300 region, and all pullbacks will be opportunities to buy unless this 5300 region is broken. So these are our picks from FMCG sectors for next week, as this sector happens to be the most active and most outperforming one as compared to the Nifty. As you can see from the chart, Nifty is still considerably below its all-time high, but all these stocks and the FMCG index as well, I can tell you, is actually trading at their lifetime high. So these are definitely outperforming Nifty in the longer term and short term as well. And these four stocks, large cap stocks definitely, Dabur, Hindustan Unilever, Britannia, and mid cap Jubilant, is something that I am recommending you on behalf of Proficient Equities for the next week. HDFC Twins. Now I'm coming to other sectors as well. HDFC Limited actually has some pullback, right? This week and previous week. But this pullback is an excellent buying opportunity here. As you can see from this chart, this level is a support level, right? This level is a support level for in HDFC. It is a multi-month support level, and HDFC is just taking a U-turn from here. Today's closing in is HDFC is 1819. So yeah, this is where we closed today. Yeah, it is underperforming the major index in the short term, but definitely it is an outperformer in the long term. So the outperformance will continue to remain there, and HDFC Limited is likely to go higher next week, just like HDFC Bank. This is another all-time favorite stocks of ours. HDFC Bank today closed at 2008. Okay, that's quite good. This is where it closed. So pullback. Last 2 weeks there was a pullback. The pullback ended, made a low at on closing basis. The low was at 1967, and on intraday basis the low was made at 1956. And right now it is pulling back, and closing is at 2008 region, and previous high is at 2065. So 2060 to 2070 will be the immediate target for HDFC Bank, and stop loss will be at around 1955 level. So you can buy on a pullback, and that will make your reward to risk ratio better. But this stock is not to be bought for a 50 or 60 or 70 rupee gain, because this is the stock. Look at the chart. This is the stock to be in the long term, right? 100 or 50 rupees of pullback doesn't mean anything for this kind of stocks, right? You have to build a position over time in cash market, if you like, and this is the stock to be in the longer term. So I'm showing you this stock. For short term, the stop loss will be definitely at 1955 level. Now there are a host of other mid-cap stocks. As I told you, whatever I told you as of now are mostly large-cap stocks except Jewel Food. But there is a host of other mid-cap stocks like NIIT Tech, right? This belongs to the IT sector. I'm just showing you the charts, and you appreciate the nature of the uptrend that these charts are showing. Mid-cap IT stock is really outperforming as well. The FMCG stock. So NIIT, you can talk about NIIT, or you can talk about KPIT, right? You see how KPIT closed at its lifetime high yesterday, and I'm sure I had told this stock many more times previously in past several weeks, from almost 220 region rather, and this stock is right now trading at 270 odd levels, and many times I have showed you this stock. So mid-cap IT sector is also going at great guns. KPIT, NIIT are all the stocks to be in, and do not forget about Infy as well, because Infy made another lifetime high today. This is the large cap stock, and IT large cap IT stock, Infosys, and for Infosys stop loss will be at around 1170 region, and these will give you opportunities to buy. So overall stop loss will be 1170 in the short term, but in the long term stop loss will be some 1100 region on closing basis, right? Unless 1100 is broken in the longer term, the primary uptrend will continue. And do not forget about TCS as well. That's a very big stock, and this is the leader in this sector, TCS, which gave another life high closing yesterday, and any pullback will be buying opportunity. Important support for TCS is 34.20 on closing basis. So there is a 200 point of risk you have to take, and anything is possible on the outside. So this is another stock to be in the long term. Now there are a host of other stocks in mid cap sector, just like Just Dial, right? The stock gave a nice breakout today above this consolidation period, above this consolidation phase. This was the consolidation phase, and this was an important resistance for Just Dial at 483 level. But today it got a huge fillip from the buyers, and it closed at 502 levels. So it closed at this level. I'm making it bold for you to differentiate between these two lines. Yeah. So 502 is the last closing in Just Dial, and as you can see from the chart that this stock actually broke out of its 3 or 4 month old consolidation zone, and in this case chances are increased considerably that the previous top will be taken out at 650 odd levels. So 650 will be the short-term target, and if 650 is taken out, any other price is possible. And as you can see, this is a multiple top resistance area. So once this top gets out, anything is possible on the upside. Another mid-cap stock that I would like to show you is Exide Industries. This stock was showing some pullback as of yesterday after making a top at around 267. This stock was pulling back, and yesterday's close was at 243. But today, Exide Industries actually resumed the longer term uptrend, and it closed at 258 level. So this is here, and now this level at 240 has become an important support, and you can buy at this level with a stop at this low, yesterday's close, right, 240 level. And again, this stock is very likely to make new highs. Yeah, the uptrend is pretty intact and strong. Last but not the least, I would like to show you the Pidilite Industries chart. As you can see from the chart, the uptrend is quite visible, and the pullback, it was actually trading in a short-term range, and the high today made, or the today's closing, was at this level, 1134, which is actually another long-term, another lifetime high, and the trend, longer-term uptrend continues to remain strong. So you can buy here with a stop loss for short term at 1066, right? 1066 will be the longer short term stop loss, and actual stop loss is 1060, right? If 1000, unless 1060 gets broken, Pidilite Industries is likely to maintain its longer term uptrend. So dear friends, these are the stocks that are most likely to rise next week. These are uptrending stocks. These are outperforming stocks. These stocks are rising more than the Nifty is rising. So these stocks are very important to look at for the next week. And before we close, we will just show you 2 more examples of weak charts. In case Nifty falls below 10,400, then those stocks, those are showing longer term downtrend, are more likely to fall. as compared to these uptrending stocks. So I have selected Coal India. Yeah, this is the chart of Coal India, a longer term downtrending stock. Today's closing was at 274 region. 274 region. So yeah, it closed below yesterday's low, and that happened in spite of today's extremely strong market. So I can see the lower top formation in this chart, and that is the basic reason behind selecting this stock as a primary or an intermediate downward trending stock. So if I sell this stock for a target of around 260, and your stop loss will be 282, right? So that is one of the weak stocks. Other weak stock I have picked up from pharma sector, Lupin. There are various fundamental factors that is contributing to the continuous sell-off in this pharma stock. So this stock will be in our radar for the next week, especially if Nifty falls below 10,400, and today's closing was at 742, almost at the same level. So this is the level that has to be broken for Lupin. Some 735 odd level, that is 1%, less than 1% from here. If 735 odd level gets broken in Lupin, that will present us an excellent selling opportunity in this pharma stock. So these are the stocks that I showed you. I have given you a brief overview of the market, which is bullish unless 10,400 gets broken on the downside, and 10,700 to 10,710 will be an important criteria that Nifty has to take out for the resumption of the primary uptrend to take place. And with this, we conclude this session, where I hope you have enjoyed it, and hope to see you next week. This video will be posted in YouTube, so you can give your comments, your questions there. I will definitely answer to your replies. Thank you.